See,
The
I know
government
the.
can kind of what?
I
Go on.
apologize.
No,
I
you're
was
good.
about to say I know the basics of bonds. I'm just learning more and more about them. I'm taking a few courses on it, and so I'm just starting to learn that. And like what you're saying makes sense.
Right. Yeah. So exactly. And basically, bond prices are weird too because you see yields, right? You see yields at 130 or whatever. The 10-year support and resistance level apparently is 130 right now or whatever. I think it's the resistance level is 130.
Mhm,
And basically what causes a bond yield to go up? Well, the bond becomes less valuable. Nobody wants the bond, so it goes up.
mhm.
What happens? How does the bond yield go down? Well, the bond becomes more expensive. So if the government issues a bunch of 10-year bond, that's going to make the value of the bond less valuable, thus making the yield go up, right? So if they announce, hey, we're issuing a bunch of 10-year bonds, and it's like, well, now the yield for that 10-year bond is going to go up.
Mhm.
And that's kind of one of the ways they can, kind of shock the supply
Mhm.
of a certain bond,
Yeah. No. Um, I'm a little bit worried about honestly this new variant, not about actually the variant itself, but what it's gonna do. Because number one, transitory inflation.
Yeah, that's fun. Fun thing to talk about.
I mean, it was gonna be 2 months, right? Something like that. 2 to 3 months.
I transitory is a very loosely used term, right? Because how like think about it this way: how long is the transition, right?
Yeah.
Um, so
Well, that's what
is
it
this
was.
is this a
Originally,
5-year transition or is this a
yeah.
or is this a 2 months transition, right?
I'd put a lot of money. Actually, I have put a lot of money on it being at least over a year.
Well, what do they say? They're not going to lift rates until 2025, and then oh wait, we're not going to lift rates until 2024, and then oh wait, we need to lift rates by 2023. And I think it even came down to 2022 was the most recent one. He
Mhm.
said was that's when we need to lift interest.
I bet it's going to
Um,
change because with the
of
new
course, it's going to
variant, they're
change.
going to be like, "Oh, we got to push it out."
Yeah. Well, yeah, and that's the thing is, I think with the new variant, the only way that they're that's kind of a tough thing because I personally think interest rates going up would be I don't know how the market would react to that first and foremost, and I think anymore there's so much pressure on the chairman of the Federal Reserve to consider. And it used to not be like this, but at one
Mhm.
point, but now it's like the chairman has to consider what's going to happen to the rest of the market, lift interest.
Oh, it's going to
Um,
be ugly. It's
yeah, and
already
I don't,
ugly now. You
yeah,
know,
well, and yeah, and I think I don't know if there's going to be a sell-off, and if there is a sell-off, I don't know how fast I don't know what the acceleration towards the downside is going to be if there is a
markets
sell-off.
aren't like reacting the same, and they're adapting really quickly from what I've
Well,
seen.
they are and they aren't, but
Like
markets are just good at overreacting because
they
there's too
are,
many retail investors, and
and
not
they
and I
definitely
say
buy
that.
the dip.
Yeah, and I say that like it's a bad thing. Like there's too many retail investors, and I think it's first of all, I think it's great for people to invest, but
Hmm.
I don't like the idea of everybody trading, right?
Hmm.
There's a difference between trading and investing.
I get exactly what
And
you're talking about. Like someone just going, "Oh, I heard about this, so we're all going to put our money in here."
right. And
And
I
it,
think it's like, yeah, if everyone decides to buy, 100 shares of AT&T, not look at it for a long time, or 100 shares of whatever, it doesn't
Mhm.
matter. But I'm just saying,
Yeah,
a well-known company, Google, AT&T,
yeah, blue
Facebook,
chip, something
Microsoft,
like that. Yeah,
yeah, and they don't look at it for a long time, that to me is great. Like I love when
that's
people decide to
investing.
do that. Yeah, but when people are like, I'm thinking about like, no, I'm thinking about like, buying as soon as I see a 5% return selling and then turning around and buying something else that's down 10% on the day. And it's like, so you're now just like swing trading, picking winners and losers and trying to and hoping that they are bouncing off their support levels. You know what I
Mhm.
mean? So
And when that's like a small portion of the market, that's one thing. But when you have more people doing that and you're basically getting rid of the rules of, I guess, investing, where you're not looking at fundamentals, you're not looking at
mhm,
basically anything. You're just looking at like, I mean, I've done foreign exchange and technical
that's a
trading.
tricky
Oh my God, it's you got to be looking at the thing the entire time. I got out of it because there was a lot of
tech analysis.
stress
Yeah,
and
technical analysis is tricky, and just because and the thing is, technical
technicals don't
analysis.
actually have to follow
No,
like what's
and
really happening.
and think about what technical analysis is. It's market psychology. It's timing and psychology, and timing is a factor of psychology in the markets. But um, No, I mean that's essentially what technical analysis is like, you know what? Like we see this stock continuously bounce off of the 21-day moving average.
And you
Anytime it
hope it
touches the
won't do
21
that
day,
again.
yeah, you hope it won't or it will. Whatever side of that
Yeah.
trade you're on, like, or like, hey, every time the stock, the sixth time it hits its 21-day moving average, it blows through the bottom of it, right? And it's like
Yeah.
that's when you buy your puts, right? So I don't know, like,
I've always done so much better with because I've tried technical. I've done okay with that on the foreign exchange. But at the end of the day, the only reason I did that was because I went back to fundamentals. I looked at Canada and I looked at they're an oil exporter, and I'm like, oh,
yeah, there
okay.
you go. So
And when I did options, I tried a few strategies and I messed those up. And then I just looked at
yeah,
fundamentals. For me, it's always
well,
been fundamentals. I've been good at
yeah.
fundamentals and
Yeah, and the thing is with options, like I'll say this, and I'm just coming. This is me. I love
mhm,
options. I am a big Pete Nigerian fan. He's the guy on CNBC that does him and his brother do unusual activity all the time on CNBC. Um,
I gotta get that.
Dude,
I finally got to start streaming it like this week.
nice. I watch CNBC every day. Like all day every.
I got a TV set up for it. I just haven't gotten to.
Yeah, well, I mean, I think it's on Fidelity, but I know
Mhm.
on Thinkorswim, TD Ameritrade use, like
Well, I still got that written down.
if you have Thinkorswim, like you can watch CM,
Mhm.
which is awesome. You might have to have $500 in the account or something like that. I don't know, but you can just watch it for free, right?
Yeah, I'll
So
figure that one out. I
yeah, but
have
yeah,
enough trading accounts that I can throw one at something.
right, yeah. So, anyways, like I love options, but I'll say this about options: it's for the most part, it's pure gambling. There's it's there's ways you can put the odds in your favor with options,
Mhm.
but just like with different legs and like butterflies and strategy
Oh yeah,
and
like
condors and
saddles and stuff like that.
right, yeah, and spreads. Like me personally, like I know what a condor is. I know how to place that order. I've never done it before.
Mhm.
I do a lot of spreads, so I guess technically I've done half of a condor, half of a long condor. So I've technically I've done a condor, but no, but really, I think options are gambling, and the reason why it is because there's a time, there's a day
Yeah,
in which this contract expires, and
I've
if it
got.
doesn't reach, yeah,
No, you keep going.
well, and yeah, and if the momentum isn't there before then, or if it doesn't reach that price before the day,
Oh, if you don't get like close to it.
unless you're on the short side of it, but at the same time, yeah, no, you gotta get close to, yeah, exactly. Like, if I buy like, let's just take a look at Apple, just because it's a stock we all know and love, right?
Mhm.
So Apple's trading at 147. If I bought an Apple 170 contract that expires tomorrow and the stock goes from 147 to 168 tomorrow, my contract won't be of any value. It won't really increase in value because there's no delta.
Yeah.
Not to get into the delta variant of COVID, but there's no delta in the contract.
There's no
So
sickness in the carrot.
yeah, exactly. But that's the main thing with options. Like, you just you had to know things like delta, theta, and how and why it makes sense. Open interest is a big one that I think everybody needs to know.
Mhm.
And how do you do spreads? Why do spreads exist? Why do options exist? Like
Yeah.
the fundamental thing for like you got
It
to know why
is
options exist.
interesting to find out like why they started, to be honest with you. Like,
Yeah, so the story I heard how options started was because of real estate. Now I could be wrong on this one, but I heard it was because of real estate contracts. Someone wanting to buy land but not buy it now. They wanted to buy it 6 months from now because they're waiting for the results of a test to come in on the land, right? So that's what I heard it came from, and then someone decided to apply it to stocks. And it's a great like options for a hedging strategy is amazing. If you're using it as a
oh
hedging
yeah.
strategy, you're not gambling. You're
Mhm.
protecting yourself. So I think
You
options as a
really are.
hedging
The
strategy, yeah, is amazing.
Like I was thinking about do it with RM and I actually put some in
Mhm.
because I gotta be honest, I was like 90% of me is saying they're gonna beat, but 10% of me is going, you've been wrong before. So and
Right.
I put in a few contracts for puts.
Oh, you bought some puts to get
Well,
against
I
RM
tried
against
to.
you,
I put in some orders. They
and
did not
it didn't
hit.
reach the limit price.
Yeah, it
Oh,
didn't. And so I saw that at 4 o'clock. I'm like, Okay. So we're
Well, I
going
mean,
into
it's not
this
a,
blind. Like,
well, I mean, it's not a, like to me, like the tough thing is like, especially in Europe, they don't have this problem in Europe because in Europe you can't exercise before expiration. You have to wait till expiration, right?
really?
The only thing you could, yeah, the only thing you could do is sell it before expiration, right?
Oh, I didn't
So
know that. All right.
yeah, so like if you buy a contract and it's in the money and you're like it's
Mhm.
gonna go back down after this, you just have to sell the contract.
Yeah. That
Uh,
sucks.
yeah. Well, I mean, it does and it doesn't. I mean, like
Yeah. I
personally,
mean,
if
you're
I
still
was
making
long,
money.
right? I mean, if I was long a contract, like, and it was in the like, no, not long a contract. If I was long a call specifically,
Mhm.
and it was in the money, I don't want it to exercise. I don't want to exercise it, right? Because I don't want to like. What if I don't have that buying power in my account?
That's
Then
true.
now I'm in a debit call, right?
Yeah.
So and the thing is, the nice thing is like there's ways like so like let's just say you like uh this is a little secret in case you guys didn't know. I'm letting all of your viewers know about this,
Mhm.
but and I haven't even mentioned this on Drunkenomics before, but so let's just say if you're in a situation where you're long a call option,
Mhm.
right? And if it expires 1 cent in the money, you have to exercise. That's the way it happens. You can call in and try and see if you can keep the contract from exercising. But let's just say like you have a contract and it's $2 in the money, right? And you bought it for 50 cents. So you're like, I'm making $150 on it, right? Like if it exercises not the end of the world, but like there's a way you can get around it. Like if you place the limit order to sell the option before close and it never reached that limit price, and then now all of a sudden the market has closed and you can't get rid of the contract and now you're going to get exercises against and now it's going to put your account in a debit call. What you could do is you could short the stock still after market. So you just short it at the market, right? If it's $2 in the money, you have a short. Now you open short, you buy the stock at the specified strike price, right?
Mhm.
So you're still making your money, right? So you're shorting it at
Mhm.
the market price, which is
Okay.
$2 in the money. So you make so you short it there, and then you buy it back at the strike price, and then
Mhm.
you call it even, right? So now you have no
Oh, I
position
get
in
what
your
you're
account.
saying. Okay.
So it's called a counter trade when
Yeah.
your options expire in the money, you don't want it to exercise, but you can't put a do not exercise thing on it or whatever it is.
I've
That's
heard
something
of
you could
like
do.
a variation. Well, not a variation, but something that it reminds me of that where like if someone wants to basically do, I guess you'd call it a block trade or something where like they want to get rid of a lot of shares, but they don't want them on the open market. So they'll use
Uh-huh.
options to basically liquidate them and they'll take like a small haircut here.
How would they? I'm not quite sure how that works. To be honest
They
with you,
do
I don't
like
know.
I think it's like a covered call or something, and they'd sell it for like a little bit more.
Oh, so they sell a covered call, like they sell a covered call that's in the money, technically.
Yeah. And so they lose a little bit. So you're not
Yeah, they
losing
would.
everything.
Yeah.
You're not losing everything. You're only losing like a tiny amount, but you get
Yeah.
because options aren't the same as being on the market. So you're not moving a shit ton on the market and affecting the volume and making
Hmm.
your price like if you only want to like say you were someone like Bill Gates and you had a ton of some stock and you wanted to
Microsoft
move like
stock.
yeah, you want to move like half of it, but you didn't want, or like even like 10% of whatever he had, but you didn't want to screw with the rest of his wealth or anything like that. So you'd like do something through options like that, where
Gotcha.
because it's not recorded, the volume on options is not recorded on the open
Well,
market that I know of.
well. So options volumes are recorded.
Oh, okay.
As far as the stocks exercise, like if you know if an option contract is exercised, I don't know
Mhm.
if that counts as 100. Like I don't know if that'll adjust the daily volume of the underlying stock. I
Okay,
don't know if it would
that may have been it. It may have been something about
because
exercise, or it might have been like someone buying the contract or something.
yeah, because options like volume like options. Sorry,
Yeah.
but volumes for but yeah, but volumes for options are definitely recorded. I mean, there's option statistics everywhere,
Okay.
you know.
Well, okay.
So yeah,
So that makes sense. I mean, I've been wrong
I mean,
before. I'm gonna be wrong
yeah,
again.
yeah, no worries. I mean, to be honest with you, I'm not quite sure like the concept you're talking about, but I think I have an idea
It
of what you're
was
talking
something about
about.
how they moved them through using options. And like they basically sell it so someone could exercise it now. They'd take a small haircut and it may not be recorded on the average volume, or it may be like whenever they exercise it, they know they're going to lose it, but it's going to be at this price.
Yeah.
and it's like set to expire a couple of weeks from now or something like that. So that way it's not like when they sold it, it's not affecting their stock. It's something like that.
Yeah.
I
I
read
mean,
the book a while ago.
yeah, it
And
sounds like it sounds kind of weird just because I feel like if you sell a cover call in the money, you're selling some time value with that too.
it may
You
have
know what I
been like
mean?
a put or something like that below what
Oh, if you bought it in the money
below
put,
yeah, it was
or
like below what theirs is. Like
well, if you bought it,
yeah,
it would make more sense if you bought it in the money put because what you're doing is you're giving the other investors some time. You're giving them like
yeah.
anytime you buy an option, there's time value baked into the contract, whether
Mhm.
it's a lot or a little. Like if it's expiring tomorrow, today's Thursday, contracts used on stocks expire on Fridays.
Mhm.
You know,
A
if
put
I'm
would make
buying
a
a
lot more
contract,
sense.
yeah, if I'm buying a contract for that expires tomorrow, like there's no time value, obviously. But if I bought a
Mhm.
contract that expires in January, I'm going to pay a heavy premium just because of the time value, right? So
Oh, I've done that.
me too. So
Leaps and
yeah,
bounds.
yeah, there you go. Nice little nice pun there. Leaps.
Hey, everybody. Thank you for listening. Due to editing, we're going to be breaking this interview up into a few segments. So if you enjoyed listening, please stay tuned and have a great day. Bye bye.